Trade wars are back, bigger and bolder than ever. The US has just slapped India with a massive 50% tariff hike on key exports. India calls it unfair. American economists call it self-destructive, and global analysts, they're warning this could push New Delhi straight into Beijing's arms. So what does this mean for India, for the US, and for the balance of power in Asia? Let's break it all down. Welcome to Arvion, your space for decoding the world's biggest political and economic shifts. If you're new here, hit that subscribe button and join a community that loves to stay informed. Today, we're digging deep into the US-India tariff war of 2025, the hard numbers, the ripple effects, and the bigger game of global alliances at play. Here's what went down. In late August 2025, the Trump administration dropped a bombshell: 50% tariffs on nearly all Indian exports to the US. We're talking textiles, leather goods, gems, jewelry, seafood, machinery, even IT hardware. Now, here's why it matters. The US is India's biggest export destination, over $78 billion worth of goods last year alone. With tariffs doubled, Indian exporters could lose anywhere between $20 to $25 billion annually. And the official reason? Washington claims India's continued imports of discounted Russian oil are undermining US sanctions. But instead of weakening India, this move might actually weaken America's influence in Asia. The markets reacted instantly and brutally. The Indian rupee crashed to a record 87 rupees per US dollar, while Sensex and Nifty tanked nearly 2%, wiping billions in investor wealth. Think about the real-world impact. India's textile industry employs over 45 million workers. A 50% tariff basically prices Indian cotton and garments out of the American market. Jewelry. India exports $11 billion worth of gems to the US each year. That sector could face factory shutdowns and massive job losses. But here's the twist. India has been here before. Remember 2018, when Trump imposed steel tariffs? India bounced back by diversifying exports to the EU and ASEAN. History could repeat itself. American economist Richard Wolff called this move like a mouse attacking an elephant. Why? Because India is now the world's fourth largest economy and contributing 8.53% of global GDP in 2025, up from just 3.4% in 2023. Compare that to the US, which stands at 26%. India's growth story is unstoppable, and isolating it won't be easy. And here's a kicker. The US actually doesn't rely heavily on India. India makes up just 2.6% of American imports. So yes, Indian exporters get hurt, but US companies and consumers will also feel the pinch. Higher prices for raw materials, textiles, and auto parts. In short, this could be a lose-lose trade war. And then came the boldest move. PM Modi announced a rare state visit to China, his first in 7 years. He's meeting Xi Jinping and Vladimir Putin at the Shanghai Cooperation Organization Summit. The timing isn't a coincidence. By showing up in Beijing right after Washington's tariff strike, Modi is sending a clear signal. India has options. Already, India-China trade has grown 8% this year despite tensions. Japan, too, has pledged $68 billion in investments in India. New Delhi is proving once again it can play the multi-alignment game brilliantly. And the optics, they tell the world that if Washington shuts one door, Beijing is ready to open another. The fallout goes way beyond trade. First, it risks weakening the Quad Alliance, the US, India, Japan, and Australia's Indo-Pacific partnership. If India feels cornered, its commitment could fade. Second, it strengthens BRICS, where India joins forces with Brazil, Russia, China, and South Africa. Together, BRICS already makes up 33% of global GDP in purchasing power parity. With India leaning in, that bloc gets even stronger. And third, ironically, these tariffs could fuel inflation in the US. American retailers importing Indian goods will pass the extra cost directly to consumers. And in an election year, rising prices are the last thing any White House wants. So where does this lead? India is unlikely to give in, especially when it comes to buying affordable Russian oil. Instead, expect India to boost trade with Russia, China, and the Middle East, while investing more in its own manufacturing. For the US, this may prove to be a costly gamble, pushing away a key Asian partner at a time when Washington needs friends the most. This isn't just about tariffs, it's about the future map of global power. So, what do you think? Will these tariffs push India closer to China Or will Washington and New Delhi find a way to patch things up before it spirals out of control? Drop your thoughts in the comments. I'd love to hear your take. And hey, don't forget to like this video, subscribe to Arvian, and hit the bell icon for more deep dives into the global events shaping our future. Until next time, stay informed, stay